Guys again, and this is the first recording for the day. This recording goes before London coming in, and it's really interesting to see what was happening in Asia. We had this move in the US dollar Japanese yen, as you can see here on this chart. We had the Nikkei going for the close with a plunge of almost 5%, and of course that this has affected the US dollar Japanese yen. Now, if you remember the recording that the analysis posted yesterday on the YouTube channel and later on the website, I was calling for a rising wedge with 1, 2, 3, 4, 5, and those highs to be taken, the previous highs in the 10330 area to be taken. Now, if you look at the market now, the US dollar Japanese yen is 10214, and the highs here were 10370 something, 10373. So 10373 we might consider the measure move for the contracting triangle is already done. And if that is the case, then we have 1, 2, 3, 4, 5 with the fifth wave here. So let's do this one with this move higher completed. Why I'm saying that this is completed? Because we broke below the lows on the fourth wave here. So this move to the upside like this. This could be the fifth wave, and this is being called an ending diagonal or a terminal impulse. So let's take a line from here and say that this is an ending diagonal or terminal impulse. And this terminal impulse or leading diagonal, it has at least one wave that needs to be extended. And in our case, from the fourth wave here to the fifth, you have 1, 2, 3, 4, 5. So the first wave is extended 161.8 out of the third wave, and you know that we tested this on the previous recording. So let me take this one out of here. So with that being said, 1, 2, 3, 4, 5, the move to the upside is completed. So our target for the fifth wave here is already done. And let me delete the Fibonacci from here. And we are looking now for a fourth. So attention please. This move to the upside was only the end of a third wave green. Okay, as you can see there. And I'm looking now for a fourth wave, to the downside, and the target normally should be at least this 100 level. Why this 100 level? Because of this contracting triangle that we had previously, and the price hesitated on the 100 level, so 100, 100, 100, and then broke into the upside. Now, after this break into the upside with the ending diagonal, fifth wave, five waves of a smaller degree completing 5 waves of a higher degree, which instead completed only 3 waves of a higher degree. And then we're looking for this move to go like this. Now, this is not going to be a contracting triangle to the downside, because we already corrected with a contracting triangle, but instead this is more likely to be something like a double correction or a triple correction even, or a zigzag or a double zigzag. We'll see. Anyways, it is normal that this panic that you're seeing here, it is normal that this panic to be seen on the market after such a rise. I mean, this is a 1 hour chart. Now take a look at how this pair has been rising. And normally it's understandable if you take into consideration what they are trying to do out there in Japan. So they are trying to reach 2% inflation target from 1% to 2% inflation target in 2 years, running a double quantitative easing program in terms of size than the one in the United States, on the 1/3 the economy than the one in the United States. So quite aggressive. Now let's also mark this. Like this as being, so 1, 2, 3, 4, 5. Not necessarily a rising wedge, but a terminal impulse. So let's write here that this is a terminal impulse. So terminal impulse with first wave extension. So terminal impulse with first wave extension and 1, 2, 3, 4, 5. Now also, if you take a look at this third wave here, this was the fourth wave. Sorry, this was coming in the form of a contracting triangle with A, B, C, B, E. Okay, so contracting triangle. Let me take something like this. A contracting triangle that is typical for fourth wave types. And even by the moment of break, as you can see, by the moment of break, when the contracting triangle has been broken to the upside, we test it and then made that high in the form of a nice probably impulsive move with 1, 2, 3, 4, 5, and then going to the downside. Now, former resistance on the 100 level, so price coming from the downside here, and it's resistance at 100, resistance at 100, resistance and broken. So former resistance might become support, and not only why this is our target to the downside, but because fourth wave ties. So remember, we're looking for a fourth wave that should come here, a fourth wave green, okay? But fourth wave ties of a higher degree usually go into the territory of a previous fourth wave. So this level here and this should be our target. Now, this is not the minimum target. It is just an educated guess about when and about where this move to the downside on the Japanese yen is going to stop, or at least is going to hesitate. I'm not gonna look on the short side once the 100 level is going to be hit, but I'm going to look on smaller time frames for reversal patterns, and these reversal patterns normally should look like inverse head and shoulders, like bullish engulfings, hammers, and so on and so forth, for a new attempt to go over the highs. So our highs now are at this one. These are the highs, 10373. As you can see here, the highs come exactly for the measured move, for the previous contracting triangle. So quite beautiful technical analysis picture here. We know that I constructed this chart together with you since price was somewhere here, and we looked at it, and now we're looking for the downside for this move to come. In terms of fundamentals, after yesterday, Mr. Bernanke speaking, we had a sell-off. We had a sell-off in the US dollar Japanese yen like this. We had a sell-off, then a ramp up for the Asian session, almost to the same high, so towards the 10350, only for the pair to be dumped on the Nikkei, going for the close. Now you're looking here, 10218, and the lows today were 10204, so the pressure is still to the downside. Interesting enough is that the euro dollar is not able to rise from these low levels, 128.49, 128.50, because all the way the Japanese yen, all the move to the upside made by the Japanese yen here, it was being correlated, inverse correlated with the euro dollar. So either this inverse correlation disappeared just like that, either the euro dollar is building energy for a break higher. We are going to find that, I guess, pretty soon. Now this is what I wanted to show you for the first recording of today. The second recording before New York comes in, we'll take a look probably at the euro dollar or the euro dollar or the euro Japanese yen, most likely, given the fact that the fireworks in this Asian session were being stolen by the Japanese yen, who's trying to make quite a comeback now. Now, until next time, take care and stay safe on the markets. Bye bye.